Hello, and welcome to another episode of the Markets Analyst series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the current market events on the economic calendar. We'll try to understand how they may impact the markets. And once we cover these, we'll do some technical analysis to try to understand the current market structures, and hopefully from there, everyone can trade from an informed perspective. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So let's start with the economic calendar and check what are the top news today. Of course, we had the monetary policy meeting minutes coming from Australia in the morning at 4:30 a.m. Didn't have much impact. Then we had the surprise drop in inflation in the Eurozone. Of course, CPI flash estimate surprisingly came in lower than expected. Trying to reload my calendar here. So we had 2.9%, which was slightly higher than the expected 2.8%, and that is for core CPI flash estimate. But for the overhead, it came in at 2.5%, which was a drop from the previous reading of 2.6%. So this is a kind reminder that in the last meeting, the European Central Bank decided to cut interest rates by 25 basis points. And now that inflation is consistently moving towards the 2% target, then there's more confidence that the ECB could consider even further rate cuts as inflation is moving in the right direction. This is not very good for the currency. The currency might have to weaken against other much stronger currencies. So fast forward this afternoon, we'll be expecting quite a number of data announcements, mostly at 4:30 and 5 p.m. So at 4:30, we'll get manufacturing PMI data for Canada. We'll get two speeches, one from the European Central Bank President, Christine Lagarde. This is at 4:30 p.m. So she's due to participate in a panel discussion titled Policy Panel at the ECB Forum on Central Banking in Sintra. So it's within the same meeting, we also be having another speech by another central banker, in this case, the US Federal Reserve Chair, Jerome Powell. So these two speeches have the potential to cause increased volatility for US dollar pairs as well as for the euro, and of course for European and US equity indices. So we'll be following closely to see the outcome of both speeches and the hints that they drop for potential or oncoming monetary policy. And once we are through with that, hopefully we'll be able to capture some good opportunities in the markets. So later on at 5 p.m., we'll have the JOLTS job openings, which is a measure of the number of new jobs or number of job openings during the reported month, excluding the farming industry. So when you track job advertisements, you're looking at future hiring. So if job openings are increasing, then it means that the entire economy is expanding and creating more jobs. But then if you see the number of job openings dropping, then it shows a bad sign for the economy, and we will treat it as such. So an increase in job openings basically means that the job market is heating up. And this is not something that the Fed has been looking forward to. The Fed has been looking forward to slow down the job market. If there's too many people who are currently having jobs, then in that case, what you experience is inflation. As more and more people get into gainful employment, as employers fight to secure employees for their company, they keep adjusting their salaries or wages higher, and that results into an inflationary path. So as long as job openings are dropping, and in this case we're expecting a drop to 7.96 million, then that would probably be consistent with the Fed's goal of slowing down the job market and eventually getting inflation to the 2% target. So what's more, looking at tomorrow, there's quite a number of things that will be happening, but most importantly, it's the S&P Global final services PMI for various economies, ranging from China, the Eurozone, the UK, of course, the ADP non-farm payrolls. We'll be looking at the unemployment claims in the US, and then we'll be looking at the ISM services PMI data before we check the most important data point for the day, which will be the FOMC meeting minutes at 9 p.m. So clearly, there's quite a number of things that we're expecting. Also remember, there will be crude oil inventories at 5:30 p.m. tomorrow. So a lot of action is expected in the markets tomorrow. So let's do some technical analysis and try to understand where the markets are and where they might be headed next. So I'm hoping everyone can see the MT5 or the MetaTrader 5 trading application on your screen. So I'm seeing some comments here from Edwin Rengo. Hi, and hello, Lamik. I missed you guys too. Hello, Edwin. Thanks for joining. What's the difference between JOLTS job openings and ADP non-farm employment change? This is a good question from Buire. So JOLTS job openings is a data point that tracks the number of jobs that have been advertised in a given month in the US, and the company that does the job is the one that we call JOLTS. Then ADP, which is short for automatic data processing, is a private company that researches on the payrolls within the US, collects data every month, and estimates the number of new jobs that have been created in the private sector every month. So the two data points are completely different. One is a measure of potential future employment, and one is a historical record of the amount of jobs that have been created in the private sector. So now that we have answered that, hello Collins, and thank you for joining. So let's get on to some technical analysis here. So I'll be starting with the dollar index, which was quite volatile yesterday. Today, attempted to continue strengthening, but later this afternoon, we are seeing the dollar index take some step back. So I think this is something we have been covering for a while now, and we know that the dollar index has been strengthening against a basket of peer currencies, mainly because the US have refused to cut interest rates. And as long as they keep holding rates higher for longer, then the dollar index is bound to strengthen against these currencies. So case in point, if you look at the Euro USD, then you'd notice that the Euro attempted to make a very strong recovery last week. But then this week, especially yesterday in the afternoon, continued losing to the dollar. Today, the Euro kept losing to the dollar, but now it's attempting to mount a comeback. So from the power chart, how does it look like? So I'll zoom out. You'll notice we were almost in a channel with a very strong directional bias before the market broke, retested, and continued moving lower. Then in the last 2 weeks, we can summarize and say that the market was just moving sideways. So if we take this area for example, from this point here, then we can argue that the overall price action for the Euro USD pair has been more of a sideways momentum. And now what we are observing is an attempt to move higher, which was thwarted, and the market started moving further back downwards. So since yesterday, we haven't seen a higher high, we are only seeing a lower low, which implies that the trend for the week for Euro USD might continue being on this sideways momentum, where the market either swings towards the upper side or to the lower side. So this was the highest price here 2 weeks ago. You can see the market attempting to break and eventually putting back downwards, and the support has been consistent. So in this case, I would say we are on a downswing, having seen the upswing, and now expecting to see the downswing towards the lower trend line as the market continues in this sideways momentum. So for now, it seems likely that the market is pushing higher, but the overall momentum since yesterday seems to be bearish. So interesting setups to be very observant about. It includes the USD trading against the Swiss franc. This trend line is currently being tested, and the market could potentially break or bounce from this trend line. So we know that it's either of two things once the market got here. Either it breaks and keeps moving higher, or it pushes back downwards towards the lower trend line. So it's the one point where there is a good opportunity, but you don't know the outcome until the market shows you. So in this case, we remain patient and wait until we see a clean break. And then a clean break higher means we go for buy positions, and a clean bounce towards downwards, then we look for short selling positions. So as usual, I would like to remind you that a disclaimer, these sessions are purely educational. They're not a recommendation to trade. They are not investment advice. So you should always do your own due diligence. And of course, practice proper risk management. So Pound USD also seems to be in a very interesting pattern, having traded in this sideways momentum, failed to form lower lows in the last couple of days, and now is strongly moving upwards towards the upper trend line. And we are almost at a point that I would call a decision point, where the pair either breaks or bounces from here. So we observe this price action from this area here to see whether the market breaks or whether it bounces from that area, with a more likelihood that it bounces and moves back downwards as long as it maintains this formation. So USD CAD managed to break a major resistance area. This was the main resistance trend line. So it managed to break last week and yesterday, and today we have seen the market come back to the same area. And now we are also at a decision point where the market either goes straight back inside, which means now we start working with targets around yesterday's low, or the market finds support and bounces from this area and moves higher towards the previous resistance area around these levels. So this hasn't played out yet, but then we also know that a break right back inside, then it sets us up for targets around yesterday's low. So for our USD, still in a range, trading sideways. As I always tell you guys, you want to avoid being in such a market that doesn't have a very clear directional bias, and you wait until you get your eventual break. And the break could potentially happen if the market breaks this area here, meaning that we are heading higher. So for New Zealand USD, it's also similar, a bearish channel. We're just bouncing from the lower trend line, which implies that we might be headed towards the upper trend line here, which also coincides with the bottom price level here, making the area as a stronger target of 0.60971. So as for USDN, this has been the most surprising one. The market has just been pushing higher and higher, despite the Bank of Japan and the Ministry of Finance threatening to participate in the forex market to support the yen. So we have seen some slight pullbacks met with a very strong demand. And now it seems likely that the market is attempting to form yet another pullback. So we might be looking for something like this that shows rejection of lower prices to identify an opportunity to go long or to basically buy the pair. So unless there is evidence of the Bank of Japan intervening, then we can rest hopeful that attempts to break this line will be met by more buyers coming into the market and pushing prices higher. So it's more of a patience, you wait and play game. So we are seeing an attempt by silver to make a recovery from recent lows, but then seems to be a very strong resistance around this area here, and immediately the market hit this area, you can see sellers are coming in and attempting to push the prices back down. So from the 15-minute chart, you can already see this is overwhelming entry by sellers, which means you might not see even higher prices for the rest of the day, having met the resistance, which is equivalent to the last high that we saw on Friday last week. So in this case, it's more likely that the market might sustain the bearish momentum and potentially just trade further downwards on low momentum towards the previous low. So as for gold, we are seeing something similar, more of a separation of price. So while gold has been really attempting to move higher, you can see the highs here are attempting to get higher, but in the last cycle, we didn't get a higher high. And now the market may be attempting to break a neckline, which is the common support here. So the potential for gold making a big move is based on whether it breaks this area or not. And the price level to observe is the low that we saw here, around 23.18. If it happens to break that area, then we have a nice and easy target all the way down to around 22.93. So just remain observant, having seen the head and shoulder pattern complete. So we wait until we see a break of this level. So Brent oil was literally trading in this, I would call it a loudspeaker or a horn formation. So we managed to complete the pattern here and break above the pattern. But after it broke, it just formed a similar pattern and started doing the same thing. So yesterday we had this breakout happening here, and the market is only continuing in that direction. So while there could be fears of the market coming back to retest the trend line, it seems more likely that Brent oil will rally and eventually get to the $88.448 per barrel price level, which was the previous high here before we started this tantrum of bearish momentum. So it seems more likely that the market will keep pushing higher and eventually get to 88.448. So the most interesting charts today are on the European equities, but we'll go through the US equities as usual. So this is US 500 or the S&P 500. We don't have much happening. The market is just moving sideways. So sometimes it's better to zoom out and look at the overall price action. And this is clear. The market is just moving sideways. But for now, there is that peculiar movement where the market is just bouncing from the lower trend line, and it could imply an opportunity to buy as the price bounces from here and moves higher, perhaps to today's high. Then we have UT 100 or the Nasdaq 100. So also has been on a sideways momentum. Nothing much is happening. So we will wait until we have some major breaks. But for now, it seems like it's just bouncing from the lower side. Same as US 30. Apologies for that. I had to respond to a message. So as we approach the end, BTC is seemingly mounting a comeback. So we have had BTC making major runs downwards from as high from 71,976. Within a short period, we saw the price drop below 60K to 58,477. But now you can see that it's now breaking the upper trend line. So this implies that we could be seeing some further momentum upside after we traded below this trend line for quite a number of weeks, actually for 3 weeks straight. So this comeback could play out as expected, and we see the market going back to 70K levels. But for now, we need more evidence to see sustained momentum here. So as I said, the most interesting assets today in the market is European equity indices. So for the Spanish 35 IBEX, major trend line was broken today. And you can see the momentum and the direction it's taking. So in this case, this is expected to continue. Of course, you have to identify the next potential targets. So if we happen to break this support, of course, we have this other area, which was the previous support. So we could be seeing the price extending the sell-off to 10,500 level. So for the Euro 50 cash index, we are seeing the market finding support today, but the overall price action seems notoriously bearish, especially considering the level of rejection we saw at the top. So while the market seems to be finding some support here, I would be
very careful not to identify the eventual breakout if in fact it happens to play out on the negative side. So if we happen to see a breakout, of course, it will be a quick drop to 48.13. But then if the market maintains the current formation or shape, then the idea is that the market now heads much further towards the previous high, which is highly unlikely given what's happening in Europe and why we are seeing this big sell-off as the political economy gets more tense. So for the UK, we have seen the market attempt to break this support. So from the daily chart, this is how it looks like. So you can see that the previous month, this is the month of May versus the high of June. They have all been going down. And now as we enter July, there seems to be more sustained pressure. So you can imagine even with a 4-hour candlestick showing a very strong pin back, which played out here, the market is still under more pressure to sell and is still moving further downwards, which gives you an overall direction of the European equity indices, which seems to be going through some form of correction, same as the German DAX. So we should be looking for opportunities in there, with my personal favorite being the Spanish 35 IBEX. So that's it for the day. Thank you very much, guys. I'll check to see if there's any questions that I may have missed. Respond to the questions as we approach the end of the session. So hello, Roy from Kitui. Thank you for joining. A good question. Is there any leading indicators or indices that gives high probability hints on CPI data of a country? For instance, Consumer Research Bureau, does it have a high correlation with the US CPI? Well, I wouldn't say there is one consistent data that basically acts or predicts all inflation reports, but you might be interested in looking at estimates from various major banks in the US. I know there's some guys who will compile all the estimates and try to do an average. You might also want to check out on X an account called Trueflation. They will do their own independent analysis of inflation and then report on what they expect the inflation to be. So you might want to check that too. These lessons are very educative. Thanks, FXpressor and Rufus for free knowledge and keep it up. Thank you. How do you trade the diamond pattern? The diamond pattern is usually a reversal pattern. So you wait for it to break. If it breaks to the upper side, it's usually much smaller opportunity. But if it breaks to the lower side, especially on a bullish trend, then you have a reversal in your hand, tends to be much better. What do you expect in the next FOMC meeting this week? The next meeting, it's not an FOMC meeting. It is the meeting minutes, which are released detailing the discussions that the Fed members had in their previous meeting. So the meeting minutes basically share more details, including the Fed dot plot. So there we will be able to see the projections for the Fed. We will know how many members are pro-hiking, how many members are pro-holding rates at the current level, and those final details will guide the direction we take in the markets. So thank you very much, guys. Thank you for your time. Remember to like and share. And of course, check out the latest episodes of the Bullish Banter as well as the Financially Incorrect podcast. Once you check them up, hopefully you'll get to gain something. So remember, if you're just beginning your trading journey, we have a free course. It's called the Novice to Pro. It's available on FXpressor YouTube. You can literally find it by just going to YouTube, search Novice to Pro by Rufus Kamau. It's a 10-episode series to help you transition from a beginner to a pro-level trader. And of course, if you would like to register for a trading account, check out the links in the description below and start right away. So thank you very much, guys. See you then.